5 in the morning and was going to wake up the whole household.
Well, relax. Let's see. We're going to go out in the lights or now?
Yeah, I guess, or whatever you want.
Yeah, I was going to set out the official tea of today's podcast.
The official tea.
Yeah, because we met
it's
somebody.
It's like scotch, isn't it?
Well, I wish. We met somebody who has a. Well, it was an interesting tea. It's really interesting. We met. I forget the name. Oh, I can bring them in with you. That's the company this morning, and they have a lot. So who do we have? So this is podcast 29, and you are
Tom Curry.
Speak up to the mic.
There we go, guys.
We get to get started.
Yeah.
So what do you want to talk about today, guys?
Well, who is Tom?
Yeah, I don't know. It's always a good question.
I'm Tom Curry. I right now I'm a partner at Dunner McLennan & Fish in Boston, but by way of background, I'm a career state and federal financial regulator.
Okay.
Oh.
And my interest in technology really comes from the regulatory side of a mature industry, the banking industry.
I'm going to interrupt you here because we have an important call from Mick Williams. Mick, are you joining us on the podcast?
Yes, can I phone?
What?
I screwed up. I can be there in 15 minutes.
Yeah, come on out. Come on out. Yeah, come here in 15 minutes and just tell them you're in 525, and we're even recording you right now. Tom just introduced. Say hello to Tom.
Hey, Tom.
Hi, how you doing?
I got a little screwed up on my time.
Oh, that's
I'm
okay.
very sorry.
No problem.
That's all right. Come on out. You're being recorded. We'll wait for you. We'll hold all the good
I'll be
questions.
there as soon as I can.
All
Take
right,
care, man.
great.
This is the nature of this podcast.
You get what you can get.
Dog in the field.
So
No rules.
to dive in, we try not to ask questions. So I think the standard start is one might ask.
Yeah, but I think the regulatory stuff's interesting. So I know on the IoT side,
Yeah.
that's the Wild West. So there is no regulatory regime in IoT or Internet of Things. There's just a new state law in California, which again is probably outside of your remit, but
bailiwick,
you know it's that was one of the topics at LES is there a regulatory regime in IoT? But in I think blockchain, the fintech world. I'm assuming there's some regulatory regime.
Wait a minute, but you're so before you get on blockchain per se, but you weren't. Blockchain is a bolt-on, so to speak, to the entire regulatory structure that you
For cryptocurrency,
that
right.
you
Yeah,
lived.
yeah,
But
I
you
think
weren't. But he wasn't even cryptocurrency. Weren't you currency?
Yeah. My former title was Comptroller of the Currency.
You mean like a fiat currency, like real
Yeah, it
dollars?
actually has nothing to do with currency anymore.
Right.
What do you mean?
The Comptroller of the Currency was established under the National Bank Act by President Lincoln, and its primary purpose was to finance the Civil War for the North.
Oh, I was going to ask. Lincoln was not the guy before Bush, was he?
A couple before.
Before. Yeah.
So
I'm sorry.
the
to
idea
finance the
behind
war.
it was, banks needed to invest in bonds, government bonds, as part of their
Banks did.
Yeah. So they created banks, national banks, in order to buy the bonds to finance the war.
Right.
Part of the law was intended to wipe out what was the existing state-by-state system of banknotes and replace it with a single national currency.
Right.
I thought about that. So banks are banks. Oh, so banks were then, as they are now, independent. They're independent entities. They're not. These are not government banks. These
No,
are.
they receive a charter from the federal government in the case of the Comptroller of the Currency, short OCC, or from each individual state.
But they're independent but regulated.
Yes, highly regulated.
So FDIC falls under the Comptroller of Currency?
No.
separate.
I'll confuse you. This is how you sound smart. Is if you could figure out who does what, you sound like an intellectual.
Yeah. Mark, you
No
will
one will
fail.
ever mistake me for that.
Yeah,
trust
no,
me.
he will
But
fail.
the FDIC came into being in 1933 as part
Okay.
of the New Deal.
Much more recent.
It ensures the deposits of all national banks and all federally insured state-chartered banks.
Okay.
They do not charter, but they are the primary federal regulator for state banks that are not members of the Federal Reserve System.
So they're a regulator and they're all effectively insurers.
Yes. So what happens when a bank fails, the chartering authority, the Comptroller of the Currency or the state will turn it over to the FDIC as receiver, and then their job is to basically ensure a seamless transition so that depositors are not adversely affected. and to sell off the assets either immediately to an acquiring bank or to manage the assets and do things like securitizations.
So go back to
along the way.
go back to the Civil War era,
Yeah.
when I assume it's called the Office of the Comptroller
Yes,
of the Currency was
OCC.
created. And then what was its mandate?
Its mandate was to charter and to supervise national banks.
To charter and supervise. Chartering meaning grant them an ability
grant
to
them
operate.
the license to operate, and then to make sure that they operated in a safe and sound manner that would not prevent, ideally to prevent its failure and resolution.
And there was additional failure that was contemplated or at least covered by the FDIC now, that was supposed to be 80 years later or something?
Yeah. The OCC is one of the oldest. Is the oldest financial regulator in the United States. The Federal Reserve System was established, I think, around 1910,
So Mark pulled a
1912.
greenback
I
out of
wanted
his
to see
wallet.
if the comptroller was one of the people that signed.
No, originally he did, but then if you look on a note,
Treasury Secretary.
It's the Treasury Secretary, and then there's a Treasurer of the United States.
Right.
And where does that office fit in? It's not the judicial branch. It's not the
it's
legislative branch.
It's its own.
It's
it's part of the.
So it's Mnuchin's the current.
yeah.
This is the complicated explanation.
We're falling in all the traps.
Yeah, the Comptroller of the Currency is an independent federal agency, functionally.
Who does it respond to, though?
It's the Comptroller is appointed by the President of the United States, subject to confirmation by the United States Senate.
Is it an indefinite term?
It's for a 5-year term, so it's intended to be independent by overlapping a presidential term. It is technically or organizationally under the Secretary of the Treasury, the Department of the Treasury, but it is wholly independent. It has its own funding mechanism through assessments on national banks. The Treasury Secretary is forbidden by statute from interfering in the duties of the Comptroller of the Currency. Submit independent testimony and recommendations to Congress without review by the Treasury Secretary.
Now, how about in a related area, there was if I'm going to screw this one up, what was the name of is the name of the agency charged with protection of consumers from fraud in commercial fraud?
Yeah, the Dodd-Frank Act of 2010 reorganized some of the regulatory responsibilities. Prior to 2010, the prudential regulators, which the OCC would have been, were responsible for enforcing consumer protection and fair lending laws. Congress changed that by transferring the specific authorities in some of those areas to the newly created CFPB.
Which is now under political fire, and we're
So-
not a political
No,
podcast.
no.
So.
And then my then question was, why has that? Well, I mean, not that we don't make jokes, but actually we're not doing very well today. But they weren't funny anyway.
I think this is interesting. This is like
Real.
This is cool
So
stuff.
why hasn't this happened to the Comptroller of the Currency? Are the decisions made? And we know that the Federal Reserve is seemingly under attack right now by the administration, though I'm wondering whether that's just smoke but no fire. But why, if the CFPB came under attack, hasn't that happened to the Comptroller of Currency's office?
I think any regulator is not going to be popular, so you're going to face criticism from various interests, whatever you do, and that's why the OCC, the Federal Reserve, the FDIC, and the CFPB are all independent agencies. There's an attempt through structural devices to insulate them from potential threats to their independence and judgment.
That doesn't seem to be working with that one office. The Office of that
Again,
protects consumers.
there was a backlash of smaller institutions, larger institutions having the institution being created, the CFPB.
Yeah.
Also, the financial crisis really caused an awful lot of dislocation within the banking system, within communities. People lost trillions of dollars of net worth. We had the very significant foreclosure crisis in the United States. All those things.
So why did that cause any backlash? that led to doubt as to the organization or where the OCC fit into the organizational structure?
I think you're seeing, across the board, an interest and assessment in the performance of the regulatory agencies. Which I think is, appropriate after what happened.
Yeah, but I don't think the OCC, the Comptroller, is in the same crosshairs because you weren't created by a prior administration or in the midst of a prior administration. And again, without getting political.
No, it helps to have been around for over 150 years.
Yeah, so it's hard to dislodge that or blame it on the
and
last
also,
guy.
a level of predictability and comfort with
Right.
the agency. Something new is always going to be under more scrutiny and create more potential disruption to normal operations.
So
makes sense.
what is a comptroller? Is that the poobah, the grand poobah of that office, or is that that's the grand poobah of that office?
The comptroller is the agency head. The comptroller also sits on various federal agency boards. The Dodd-Frank Act also established the Financial Stability Oversight Council to oversee significant financial institutions that could affect financial stability. The comptroller also is a ex officio member of the FDIC Board of Directors. Then there's a connection between supervision of banks is a risk mitigant for the FDIC. If you have highly regulated institutions and you're looking at potential deterioration, you have the opportunity to correct it.
So when you did this, did you ever actually sit down and do work, or was it all running around testifying?
There's a lot of responsibilities. One of the least attractive parts of it is testifying before Congress. But again, from a government accountability standpoint, you know who the boss is when you have to sit in a chair for 2 or more hours and answer questions. Yeah.
So so going back to the question about doing work, you
Are
managed.
you interviewing, David?
I'm not
Is this an
interviewing.
interview?
It is, but you're filling in the other gap. Did you was it a management position, or was it did you actually sit down and write, for example, draft legislation, draft regulations, or anything?
The OCC is a 4,000-person organization with 90 offices here in the United States and in London. It has a $1.1 billion budget, so it's a large organization, not the largest in government, but a significant organization.
Is that more? That's a bit larger budget than this podcast has by a dollar or two.
Yeah.
Or
it's
was it $1 billion or two?
Yeah. Also, to give you an
close.
idea of the scale of the responsibilities, over 70% of the banking assets in the United States are supervised or held by banks supervised by the OCC.
And he also learned how to speak in that level, calm tone, which I missed.
Well, I think it's probably the result of having been in that chair for hours on end that you described, taking all the flack from folks. That can't be pleasant.
Well, sometimes when some documents I write, we go out of our way not to emphasize any one word more than any other word, because you never know downstream which word is going to be more important.
Right.
So he's learned to do that with his tone.
It's amazing. So, may I ask which president appointed you?
I was appointed by President Bush to the FDIC Board of Directors. That's also
The younger Bush.
yes, George W. Bush. And then I was appointed by President Barack Obama in 2012 to be the Comptroller of the currency.
Oh.
So this is not that long ago.
No,
so
no,
your 5-year term
Ended
when?
in May of 2017.
Oh,
Oh.
wow.
So tell us about, the hot topic is now, not really blockchain. I think it's cryptocurrencies, because blockchain,
And
blockchain is
ICOs and
irrelevant.
everything.
Yeah.
Blockchain is irrelevant to you. What you cared about was cryptocurrencies. But did that office care about them?
No, I think it's. I wouldn't say that I didn't care about it. I think I started to say the OCC came at financial technology or fintech really from a regulatory standpoint.
Yeah.
Supervised banks. You have a very a significant strategic issue that technology provides or presents to banks of all sizes. From a regulatory standpoint, you, number one, want them thinking about those strategic implications to their business and to act on it. One of the other responsibilities of the office is to make sure that they supervise the IT or assess the IT functions of banks, one for security purposes, and also to make sure that they have appropriate contingency plans in place if there is a disruption.
So that translates to me
Yeah.
to caring less about cryptocurrencies per se, cryptocurrencies as cryptocurrencies, but rather how banks deal with them.
Yes and no. That's only part of the answer.
Somebody jumped the gun here, Mark.
No, the
It might not have been you.
cryptocurrencies, banks, particularly the large banks, are active as traders and facilitating financial transactions for other parties.
Yep.
So there is an issue as to with the banks, and I think you've heard some of the CEOs of the largest banks whether or not they're willing to engage in that business
Yeah. for
reputational and other business reasons. There's also an underlying legal question, is trading in Bitcoin a power for a national bank, an authorized power?
Right.
Is it similar to, and I think this is what's occurring with the CFTC and the SEC, is it, can you analogize it to other similar products and under what your current statutory framework?
Is it analogous to a drugstore also selling cannabis in a sense? I mean, because
yeah.
cryptocurrency being sold from a bank seems like the bank is trying this wacky new stuff.
Yeah, I think there's
that's
right,
Wild
I
Wild
agree.
West.
Yeah,
That's
I
all I
agree.
meant by
I agree.
the.
Yeah, banks are very sensitive to reputational risk. So
course.
before they enter into a new field, or particularly one where there is, an emerging regulatory environment, that there'll be a hesitancy to.
But wait a minute, so going back to the question I interrupted you with, it does still sound like when you finally got to the second half of your answer, it still sounds like you're interested in cryptocurrency as it relates to banks and not cryptocurrency as it relates to anything else. And I think there is a lot of anything else.
Yeah.
Because if I'm not mistaken, cryptocurrencies would be quite happy not to ever be in a bank.
No.
Well, that's almost the reason they emerged, I
Right.
think, is a bank avoidance
Yes,
or the
yeah.
financial system avoidance.
That's another area where the financial regulators, bank regulators play a role. You're talking about enforcement of the Bank Secrecy Act and anti-money laundering activities, and again, that's one of the other hesitancies.
Oh, that's true. You guys could weigh in there.
Yeah, that's why there's currently, I think, a hesitancy for mainstream banks to be engaged in the business of trading Bitcoin or facilitating the transfer of those
But
assets.
it's also
So
like
that gets to your
because they
question.
don't want to facilitate tax avoidance either,
So
or
wait a
illegal
minute.
tax
That
avoidance.
gets back to Mark's point about the marijuana.
Drugstore selling
No,
pot.
no. Sorry about at least the marijuana, which was by keeping profits and money's revenues, or actually any bank, as I understood, there was banks were prevented from federally regulated banks from doing any business with marijuana businesses.
Yeah, I mean,
Correct.
yes.
I think it's still true now.
Yeah,
Still
it's
true.
the law. I mean, it's an unsettled situation. You have the Rohrabacher Amendment that precludes the Justice Department from spending any money on enforcement of medical marijuana, but that provision does not extend to recreational marijuana. Right. It's still classified under federal law as a controlled substance. You have civil forfeiture laws that could come into play, which would affect banks' security interest in collateral for a loan.
So that tension between states versus federal.
Yes.
Where depending on where you come from, politically, states' rights dominate, or my view of federal laws dominate. So,
and for marijuana and banks providing banking services for it, that's really going to require congressional action. And it appears that there's a growing momentum as more and more states are authorizing both medical and recreational marijuana, that at some point Congress is going to have to act.
So what does that tell us about what's going to happen to the extent there's a parallel between federal regulatory control of banks vis-a-vis marijuana? Is that going to affect, or are we going to see a parallel activity in cryptocurrency, or are these so wildly different that the notion of parallels is out the door?
I think one's the vehicle for the acquisition of the other, in a sense.
No, I mean, I think it's all going to depend on the activity, and the law is going to apply if it's an activity that falls within the legal remit of an agency.
Right, but where's it going to go? I got that.
Yeah.
What you just said was, if the law applies, the law applies.
Yeah, and I think
But
what you're
what's gonna
seeing, I
happen?
mean, what you're seeing in fintech, financial technology, whether it's Bitcoin, whether it's marketplace lending or in the payments area, which are the areas that I'm more interested in, it's really, you have the regulatory community feeling out how or whether or not existing legal frameworks apply to these new technologies. I think actually that's very healthy.
Right.
It's important to experiment and to see how an industry or a concept or or a technology evolves before you step in and force a framework on the situation.
And that is not, that then pertains largely to cryptocurrencies, but not to banking for marijuana.
No, it's a lot clearer.
Yeah,
with
and I was just doing the analogy rather than linking.
Yeah,
I
well-
didn't close the bottom of the triangle the way you just did, but I was
Well-
just trying to come up with an analogy that was, to me, banks trying blockchain and cryptocurrencies is akin to a drugstore selling marijuana.
Well, actually, on blockchain, I would distinguish between
Yes.
Bitcoin and
Blockchain,
blockchain.
yes,
Banks
yeah.
are actively, especially
Oh.
large in blockchain.
You stumbled into an issue, Mark.
There is
Scary.
what's being tested by
Very
some of the
scary.
larger banks and some of the settlement firms is this a technology that can be used for settling trades?
And how's that coming out? So that is also subject to regulation as well, correct?
I mean, look, I'll back up a little bit on that. The
Sound effects.
philosophy of or my philosophy as a regulator, and I think one that's still prevalent among the current regulators, is there's a reluctance to prescribe technological requirements.
Correct.
That it's better to establish what the overriding principles that should be applied. So from a supervisory standpoint, with something like blockchain being used for settlement purposes for banks or interbank basis, is that is the technology secure? Is the
Hi, Mick. We're just listening to a very interesting
technology
answer. What's up?
allow for verification and compliance with applicable laws like BSA and the anti-money laundering requirements and regulatory oversight.
Yeah, no, it makes perfect sense. I mean, it seems to me, and while David's getting our other friend, the ICO versus IPO tension, the initial coin offering for those listening in, it just seems like, again, it's another sort of unregulated way of doing what already exists. Just like, the whole cryptocurrency thing is an unregulated way. And one might say it's a way to avoid the system, avoid taxation, avoid regulation. And again, some of the cryptocurrency early use cases were, aside from tax avoidance, was illicit things, was drugs
it's
or
the Silk Road. And,
Silk Road, all that crap. So, what's your view of the kind of ICO IPO tension, if you will?
Well, I think what we're seeing is, an appropriate, that evolutionary approach. The agencies like the SEC and the CFTC are looking how to apply, their frameworks to a product. I think the CFTC has been very successful in recent court cases in having cryptocurrencies being classified as a commodity. So they're applying principles of regulation for a commodity to this type of commodity, the cryptocurrency.
Right.
And
That was a
I
tough
think
run.
over time you're going to see whether or not there needs to be legislative adjustments of applying that existing regulatory structure to something, a new technology.
We need some non-seriousness here for a moment.
Yes.
This
Is
is
that
too
possible?
serious. Yes, possible.
Actually, I
So-
think this is honestly
is scary.
This is scary, interesting though to me. Before you inject any, and usually
yeah.
I'm the
Oh my
one
God.
with injecting nonsense.
Yeah, well, you are just nonsense.
But by the way, just
Two two people who now listen to this podcast.
Well, we
This is
lost
probably
one.
no, that's us. And this is the only time we'll hear it. Oh, no, Tom's here, 3. We get 3 today. Mick Williams has arrived and was stuck at the downstairs desk because I believe they thought he was a criminal.
Or that he said he knew you, Dave.
We're getting going here, Mick. We're just introducing you on the podcast.
Hi.
Decorations up ready?
We do. Join us and hop in front of a mic. Have you met Tom Curry, you guys? Well, you met Mark. Tom Curry, you met. It looks like you fell off your bike, Mick.
I did.
No shit. Look at this. So to the now one listener we have left, Mick has shown up with a big slash across his forehead and a bruised eye. Oh my God, and broken
Barroom
glasses.
brawl.
What happened to you?
I don't want to tell you.
Oh, well, we'll turn the mic for you at least. Oh, well, so this is Tom,
Hi, Tom.
Curry.
Hi, how are
And
you,
what we're
Mark?
going to ask, this is actually a quiz for the podcast, which is, Mark, tell us.
You do look familiar, but I don't know your name. I mean, I know several Tom Currys.
Yeah,
But
okay, that's good.
anyway,
So do you watch C-SPAN a lot?
Yeah, Mark's going to try to
especially in the
summarize
last
what Tom Curry
administration?
does.
Tom, it was the most recent comptroller of the currency. So I'm assuming you saw him from all of his many appearances on C-SPAN.
I'm always just riveted to the screen on C-SPAN.
Yeah,
It's
yeah.
so
Let me ask, though,
exciting.
before we get too far, Mark, remember, you've been deposed undoubtedly.
What are you suggesting?
Well, what do they always ask at the beginning?
sir.
What do they always ask at the beginning? Don't they say, are you
When
under
did you
the
stop
influence?
beating your wife?
No.
Oh, wrong deposition.
That was the divorce
That's the
you
one
went
down
through.
the hall.
That was your divorce. No, they always ask whether you're under influence of alcohol, drugs, or anything
No, they
else.
always ask you that as the patent lawyer.
No, but Lucky and Mick, we didn't ask him, Mick, but when did you fall?
I
on the way
fell
over?
Actually, last night.
No shit.
Are you
What
okay?
happened?
This is not something to spend a whole lot of time on.
Well, it's unusual.
Well, we've been talking about ICOs and cryptocurrency.
Right, and lo
and
and
the, and the
behold,
structure of the federal government.
and this
Really
is,
exciting
I
stuff.
fit right in with that, I'm sure.
so what happened? We need a little diversion. Tom's
I
been
tripped.
torturing us. You tripped?
I tripped on a rug on a wood floor.
Oh, how'd that go? Who won?
Well, you see what,
I think the floor one.
it didn't go well.
So, okay, well,
Anyway,
Okay.
and then my bicycle broke on the way over here. So I had a lot of problems.
oh, I see. Mick is having a
good
tough
day.
day. So,
It's one of those days.
so this is what it's like to be in the real world and not in Washington, D.C. You get to go from running like oodles of money to talking with people with broken glass frames and big bruises on their foreheads. So anyway, Mark was trying to summarize what
It was
Tom
actually-
did.
I actually, again, for the half a listener left,
Yeah, they're
so
gone.
he's one of the
Brain dead. They're not, there's a lot of them out there, but just,
exactly.
they're not
So
working well.
he was one of the key regulators for the federal government for a long period of time, and has some knowledge of various issues, regulatory issues around currency in general. And we've been talking about crypto.
Does he print the money himself?
No, and in fact,
No.
I did take a bill out of my
Yeah,
pocket
yeah.
to see if the comptroller was one of the people that signed
Signatories,
it, but
yeah.
it was we actually.
Did you ever
Haven't
see the
done it in
Mikado?
100 years.
Did you ever see the Mikado?
So you never got
the
to see your name on
Japanese,
a
yeah,
dollar
show?
bill.
Yeah, the Gilbert and Sullivan.
Sure,
Wouldn't
you
be
were
worth
hoping.
anything. It wouldn't be
With,
worth anything.
with the
if I
poobah? You remember the poobah?
Yeah.
The
well, I mean,
poobah. This is the poobah, but instead of walking around the stage with a big list, he's watching all the currency.
And now he's a partner here.
Yeah, he's
did.
probably
The mighty have fallen. Yeah.
Exactly. This is the grilling you get instead of no congressman. I mean, no one will see this, but you don't have to do that gesture where you put the hand over the mic and lean over and talk to counsel.
So where we were when you so rudely interrupted,
yeah, I'm so sorry.
where we were was we were
you ever
learning
hear
about.
about my dog
do you
eating
know,
my
you know
homework?
who Mick is? Mick
Oh,
was
yeah,
the
I'm sorry, we never
founder
introduced Mick.
of one
Who
of
is
the
Mick?
key angel groups,
Oh,
Boston
great.
Harbor Angels.
Okay.
So it's
We're
well known.
trying to print currency.
Yeah,
We haven't
Mark's
been
doing
able to
his
do it
paneling
yet.
thing.
I am
You
doing
are,
my
your
paneling
paneling
thing.
thing.
I'm
So
also,
anyway-
also trying to be a good co-host.
You are. So where we were was that we had learned that this was the poobah, not from the Mikado, but of all currency, and that they address it's a purely regulation of banks, and we were diving into
not necessarily banks.
Oh, what else?
For those of us that paid attention.
I wasn't
There's
paying attention.
actually
because I
a
failed
longer
that exam.
reach. One of the areas where the bank regulators and the OCC in particular focus on is third-party relationships. So there's a lot of investments and partnerships being formed between fintech firms and banks. what the OCC.
Sounds like banks still, though.
Yeah. No, yeah, it's more, I mean, as I mentioned earlier, my interest is more on the payments and like marketplace lending side because it has a direct interface with the regulated banks. But there's rules and there's legal requirements governing those relationships.
Yeah.
So-
So let's pretend I was a listener who had gone out and gotten a sandwich in the fridge. You know, like at the football game. This is almost like a football game. I'm vaguely.
I've never watched one, so I don't know.
So going back to where I was
No,
before I
so
got my sandwich.
actually, where I think
we were on blockchain.
when you walked out,
yeah.
we were talking about the ICOs versus IPOs.
No, wait a minute. No. When I walked out, when Mick finally showed up with his broken glasses, you were talking about whether it made sense for the OCC or the poobah of currency to get involved with at the low level of technology used by the banks. And arguably this could be a case of what is that thing about apologize versus permission?
Yeah.
Don't you wait till the blockchain breaks and say, and they go to the OCC, oh, we screwed up, we won't do that again? Or do you go first and say,
It's
we
better
plan?
to apologize and seek permission.
Yeah, so how does that work on banks and technology?
Actually, as comptroller, I kind of didn't subscribe to that. One of the things we did was actually look at responsible innovation from an agency standpoint. First off, internally, were we discouraging both banks that we regulated and external parties from engaging in fintech-related activities? Established an Office of Innovation, and the idea was to take the regulatory expertise of the agency, policy people, lawyers, supervisors, and have them available to both fintech firms and banks. One of the things that, especially in the area of payments and in marketplace lending, that it was important if there's going to be relationships or between the two sectors, better to inform people up front what the rules are and how to avoid them.
Then have to apologize.
Yeah, and to use marketplace lending for an example, there are a lot of extending credit to consumers is highly regulated regardless of whether you're a bank or not. Most of the laws apply to creditors. So if you're going to build something, technology around a type of transaction where there's a host of legal requirements, you ought to design that, whatever you design, you ought to build that into it.
Okay, so what you're saying is that, as in other areas, you tried to stay ahead of either whether it was technology or issues.
So here's sort of it's not an interview question.
Well, mine wasn't either.
We're like an Amazon, and I don't think they are, but were they decide at some point, we want to be a bank, would they come to OCC essentially, or were they to say, I'm going to go form a partnership with Bank of America or
they would need a charter,
Bank?
right?
Yeah,
They would be chartered.
Yeah, I would not first use the Amazon as the example, but
Well, why not, by the way?
because it's a different
Politically.
set of problems. Yeah.
Oh.
Big brand A,
Yeah,
big brand Q,
no,
whatever it is.
A couple of things. Yes, you can. One of the things I did as comptroller was launch an initiative to issue special purpose national bank charters that would be available to non-banks, fintechs that
For
would be-
example, PayPal.
no, let's stay away from that for a little while.
Oh, ooh.
All right. Let's say
Ooh, we're not-
you have a a payments platform.
Mark and Dave's payment platform.
Yeah.
The current legal structure is you have to use a bank. You
Mixed
can't get
rug
into
and
the
floor
payment
payment
system.
platform.
If you had a bank charter, you could directly cut out the middleman. You could directly.
So the notion
bank.
of this special purpose vehicle is really to incubate new ideas and innovate?
Part of the setup was to actually have some level of experimentation on products and on entities. But the charter would allow fintech firms not to have to get FDIC insurance, not to take deposits, but be able to operate a national platform
With-
off
in
of
a
off
bank-like
of National
manner.
Bank.
And does that mean they would have extra warnings on their advertising and posters for anyone who
No,
banked with them? Or are they
the-
operating at a
No,
level where they don't deal with
The advantage
consumers?
is the single platform under the current framework. If you're a payments firm, you need to be licensed by the 50 different states.
Yeah.
If you are a federally chartered national bank, you operate under one charter, one supervisor, one set of rules.
Does being a bank necessarily mean you deal with consumers, or can one become chartered simply for purposes of sort of playing with the infrastructure underneath all the banks?
Banking rather than being a physical.
Bank, yeah.
That's what
Retailing versus.
This is what the special purpose national bank would allow you to do, is to be specialized.
How many are there?
It was delayed by litigation towards the end of my term. My successor, just this past July, after the Treasury Department issued a report on innovation in fintech, announced that they would accept those charters. There is also going on right now, and this is why I wanted to stay away from some of the names you mentioned. There are other firms, Vero, which is seeking a full-service FDIC-insured national bank charter. They received preliminary approval several weeks
And
ago.
but what's different about them? What's different about them versus the bank, what the name of the local
Well, I was
bank,
just thinking like an
Orange or
insurance
something?
company would probably want to do that as an example.
They have in the past, but
Okay.
there have been insurance company subsidiaries, but most of them have pulled back from that for some of the larger.
So what would be different about this one that you said that was just granted, or about to get granted?
They would basically be a technology only bank.
So an online bank only?
Yeah.
Aren't there a bunch of
different?
those?
No, this is different because it's really, it's based on their technology. It's really to access the payment system and to have a single regulatory framework.
So we got the regulatory framework, but can you talk about what they would do that Mick might see after falling on the rug? I mean, if
saw
he sees
stars.
anything, he saw stars.
Don't laugh at Mick.
Fair enough. Right?
Yeah, so what might be different, though? What, as a consumer, what might we see?
No, it would be, basically the underlying technology for dealing with the bank, the mobile applications, the internet approach would be different.
This is like being
Yeah.
able to, but being part of the banking system means you can clear transactions.
Yes.
And-
That is
Right. You can be a player. You can be a player
Yeah,
at
but
some
but
level.
they can accept or receive,
Yeah.
accept or send money.
Yeah, the
effectively.
other advantage of being a full service as opposed to the special purpose bank charter I'm talking about, you get access to federally insured deposits, which are a very cheap and reliable source of funding.
Right.
Oh.
If you're not a bank, you have to rely on the capital markets, commercial
Oh,
paper. That can dry up for a
Overnight.
variety of
Oh, it's
reasons.
right, because banks
Yeah.
have access to money at prime rate or whatever it is.
Yeah, and
Depositors.
Depositors, it's,
Your money.
Okay, what are the reserve requirements? Any different than a normal bank? You still get the leverages?
yeah, it's, in the example I'm using, they would be a bank and they have to, make some structural adjustments to meet, regulatory requirements. But again, my philosophy always was, let that be a business decision. If they can meet the statutory and prudential standards, why don't you allow them to enter into?
So would this
The
be the
charter.
vehicle by which a company, an entity like, I think you said Vero or whatever the name was,
Mm-hmm.
might decide it would become part of the banking system purely based on blockchain for purposes of reconciliation, or is that entirely irrelevant?
I think that's different. I mean, that's really, would be, the value there would be for the larger banks for their settlement activities. And it's
how
more
would-
of the technology as a means of, abandoning, their legacy systems and starting from
And how would that all
scratch,
go
basically.
about? Has that been accepted? That is it permitted for a bank to toss out the entire back office or a big chunk of their back office staff
Well, I
and
think
go
what
to
you
blockchain?
missed when you were going out to get
Mick.
Mick is that,
Mick.
Yeah,
You missed the best part, Dave.
It's an opportunity.
Sorry, I got my sandwich
It's
there.
an opportunity to reduce costs and increase efficiencies.
Agreed. So where
Yeah.
does that play out, though? Would this
From a-
need to be a regulated
No,
activity?
no, I mean, it's a technology as opposed to a regulated activity.
Okay, but would they need permission?
They would need to make sure how they engaged in that was consistent with, prudential and risk management
And
considerations.
how is that proven, and/or are banks doing it
Well,
already?
Banks are examined from an IT standpoint by
Oh.
the regulators. And the reason behind that is to make sure that,
Right, they're cool.
that
They're
things
not
don't.
gonna lose Mark's money.
They don't crash and
Mark
that they
has no
can't.
money.
Oh,
They
well,
can't,
okay, bad example.
resume business in a relatively short period
So
of time.
is that accepted? That is it on a bank-by-bank basis, or if a bank says to you, we're using such and such as blockchain scheme, we're good to go? You've already approved it, sort of like FDA approval on medical devices.
The
We're just like that other
No,
bank.
the way it works with technology is it's more that the regulators set general principles or standards. It's up to the banks to meet them, and then the regulators go in and assess
Verify.
whether or not they've done that. What I mentioned while you were out is there's a hesitancy.
Getting my sandwich.
There's a
Or Nick.
hesitancy to impose from on top or mandate technological or technical requirements. The key considerations are the security of the information, whether or not you're complying with bank secrecy and anti-money laundering
So this will
requirements.
sound a lot like those hearings
Mr. Chairman, he's harassing the witness.
I can get up and leave at least here.
You're under oath. Let me remind you, you're still under oath.
He likes
So Tom,
beer.
you have the rule book. Where's your whip? Who do you call when you say there's been an infraction? Do you call the FBI? Do you call-
Ghostbusters.
No, I mean, we have, the bank regulators have a lot of sanctioning power on their own. You
Oh.
you can impose civil money penalties, you can impose orders, enforceable orders. You can shut the institution down if it's unsafe.
You're not
and
worried
so-
about them not paying attention to you?
No, they listen. They listen, yeah.
Very closely.
So can I
Yeah.
harass you with that question?
Yeah.
So is blockchain being used by any bank to reconcile transactions?
Large banks are conducting testing.
It's still POC,
Yeah,
proof of
yeah,
concept
yeah.
stage.
Oh, and do you have any sense where that's going to go?
I think that it's, as I said earlier, they view it as a
Sandwich time.
potential way of improving their technology and reducing costs and increasing efficiency.
So how do we get from blockchain then to cryptocurrency, which is a very different issue?
Yeah.
So are there any banks that are accepting cryptocurrency for any reason?
There's very little acceptance of it. Again, it goes back to reputational risk and issues with compliance with bank secrecy and money laundering requirements.
And by definition, a cryptocurrency, you don't know where the money's coming from and where it's going to.
If it becomes a mature market and things stabilize, I think you'd see banks acting as intermediaries and custodians.
Because it's the equivalent of an envelope of cash on the street.
It fits into the financial system if things are
If Mark could
mature.
get over his reputation as or I guess he can't, as a
I don't
criminal.
really have much of
Yeah.
one.
No, if Mark weren't a criminal and could prove that to the bank, so that I guess the know your customer could be met.
This is the I'm not a crook.
Yeah,
That was a
so
different
I guess
precedent.
it's not enough that Mark not be a crook when he tries to exchange cryptocurrency with the bank. The issue is, once people know that Mark's capable of doing that, he can get crooked money itself, and that's the.
No, but it's double blind. I don't know, at either end, I don't know who's the buyer, who's the seller. I don't even know who the intermediary is, quite frankly.
Yeah.
So
Yeah,
there's
so
no,
that-
so really the only trust is in the fact that there's anonymity, I suppose.
So how will that ever get fixed?
Right?
How
Because
will?
it's a trustless system.
Well, I mean, that's flip it around. The banks have a legal requirement or obligation to report suspicious activity
Right.
in transactions. So they need to be able to tell is this a legitimate transaction? Who is it? Do they know
Well,
the
say you know
customer?
Mark, say you know
Yeah.
Mark, say you
Yeah.
do know Mark,
Yeah.
and the amount of money he's changing on a weekly or monthly
Mm-hmm.
basis seems consistent with Mark's regular activities. So there's nothing for you to be alerted by that. Is it possible that you could exchange cryptocurrency for him if he became a member of the accepted club, the frequent cryptocurrency users club?
Then you don't need the cryptocurrency.
No, you might need it because you may be as part of your regular legitimate activities, may be obtaining cryptocurrency, which you'd like to turn into fiat currency, and you want to be able to turn to your bank to do that and not to Mick in his mixed
Street
ro-
corner.
slip and fall bank.
The pizza shops are now taking cryptocurrency. Now,
Well, they're taking
what's he
Bitcoin.
going to do?
Yes, exactly. Yeah, that's the point, which is if you know the pizza shop, is it knowing one level of customer deep sufficient, or is that part of the issue with crypto?
It's a whole complicated area of compliance and legal requirements, but you need to know who your customer is, basically. You need to be monitoring transaction activity, and you have an obligation to report suspicious activity.
So it seems like that could happen with cryptocurrency.
Yeah, but the pizza shop example
Yeah.
is sub $10, let's
Sub.
say.
We didn't say sub shop, a pizza
Well,
shop.
there you go. It's beneath. Just as this podcast is
Podcast
beneath Tom.
He hasn't walked out yet.
Well,
He's getting close.
He's looking for the door
Keep
or
going.
a window.
So what was your point if you had one?
But I did have a point. But in the
Mick's gonna
banking
tell us
world,
what
I think
time and
anything in
weather is.
excess of what 10K
10,000, yeah.
it gets reported, even if they know both parties.
Yeah,
the
but
buyer
and
and the seller.
also banks are required to monitor like patterns of activity.
Right.
So it's an expensive, actually, technology, actually, the people call reg tech actually has an opportunity with things like BSA, AML compliance, because you need to be able to connect to what could appear to be disparate transactions
Right,
together.
right,
So I think
right.
the view is that, the banks need to rely more on technology to make those connections and to reduce the cost and efficiency of the monitoring.
So can you see a day? Can you see a day when banks would be involved with cryptocurrency, or is this not going to happen?
I said earlier, I think it has to,
I forgot.
both the industry has to mature and the regulatory environment on the ICO side and on the trading side has to mature before the banks will
Tom,
become
you
active.
mind if I ask you a personal question?
Uh-oh.
This is, how many pages of regulations are there, and how many can you quote?
How big of a room are we talking about?
Okay, so ignorance of the law is no excuse, but I haven't read all the pages, so how am I making interpretations? I'm just curious. You've been trained in this.
Yeah.
Well, you were a banker and an attorney,
Both attorney on the regulatory side for 35 plus years.
but the regulations have changed. 35 years
Yes,
ago, there were
yes,
3.
yeah.
Today, there's 14
No,
billion.
no, there's a lot of paper.
All right.
No, but what's interesting about what's going on in fintech and cryptocurrency is how do you apply existing legal requirements appropriately to
something that
something
never
new?
didn't exist, yeah.
And can you analogize it appropriately to something that already has been regulated? And I think that's what's going on with cryptocurrencies with the CFTC, and they've been successful, in court over that. I think that's actually healthy. See how it works. It's experimentation, and then look at whether you need to change the laws after you see what's happened in the
There's
market.
the justice who said, I know it when I see it.
Yeah,
I
that's
don't know."
pornography, Mick.
Right. And there's the justice.
And Mick sees a lot of it, apparently.
No.
Well, you can see suspicious activities are sometimes, self-apparent or whatever. And so when you see, I know there's something going on here, I don't know what it is, I'm not sure what regulations apply. But
No,
it
it's
sounds
very
like a very
calm.
difficult job.
No, it's very complex, it's very expensive. And again, I think that's where the opportunity arises for technology to, improve the process and reduce the cost.
So let me kind of flip it a little bit. So you're an attorney here now. The kinds of clients that you're seeking or that you're working with are young companies, old companies, companies that are looking to create technology in this space. D, all of the above.
Yeah, all the above,
Okay.
I think, yeah. And it's really, again, if you can, in the design stage, anticipate what are going to be regulatory issues, you're going to end up, with a better product and less problems down the road. And I think that's the tension you have. People are very interested in, getting funding and delivering the product. I think you want to avoid having built-in or baked-in problems if you can avoid it.
Right.
And that was why I established the Office of Innovation at the OCC, was so that innovators could come in and bounce ideas off and then go back and incorporate that into their design work, and then also to develop a portal so people could pitch ideas for some level of experimentation
How
or
did that-
clinical trials.
What was the, you were in two administrations, right? One Democrat and one Republican. Was there, as a practical matter, any difference between the two in terms of the control the administration had on you and or the regulations you promulgated? Or was Democrat and Republican pretty much the same across the board because the office is independent?
Prior to the financial crisis, yes, I think financial regulation was a political issue since the
Oh, it was?
financial. Oh, yeah. I mean, you've got the issue of the financial assistance that was provided to stabilize the banking industry after the crisis. Too
that-
big to fail.
Okay.
Those are all hot political topics as well as regulatory issues.
Was that during your tenure or just?
Yeah, I was on the FDIC board and
Right when that hit.
when the crisis hit.
Oh, my
Oh, wait a minute, this podcast is called Failure, the podcast. Is there anything interesting that you can address?
That you-
We're finally getting to failure.
We finally gave some- I saw failure in a big way.
Other than the inherent
bigly.
failure, the inherent failure of this podcast. But is there anything you can address on the failure side? Either,
Why things failed or what you learn, what people
Yeah.
learn from failure.
it's a big topic.
Yeah, no,
Look
I
at
mean,
Mark, after all.
I think there's a lot of books on the subject and more to come. But a lot of things that were viewed as innovations really were fads. You look at financial technology in the sense of or financial engineering, what went on. I think there was a failure to question. There was a lot of drinking the Kool-Aid on.
Irrational exuberance.
Yes, I recall very smart people saying that we've eliminated risk from the financial system with securitization.
Would you have, with the banking, would the poobah of the currency been involved in the securitization, closely involved, or was that somebody else's issue?
The OCC supervised most of the large banks in the United States. As
and they were
well
the
as
ones who
a
were doing
number of
this.
smaller institutions. Also, as Comptroller, the host of regulations that were required, I participated in. We were part of the rulemaking for the Volcker Rule, the qualified mortgage rule, the securitization rules. It was a lot of work and a lot of complexity, which I think some of those areas need revisiting, and they're being revisited.
So from what I read, what was the book by Michael Lewis? There's probably a few of them about this.
Liar's Poker?
No. The one that was about the securitization. Part of it was the the electronic trading. It was that, but in any event, it looked like there was never a good explanation of securitized, what was it, securitized mortgages?
Yeah, subprime mortgage lending.
Did you learn in all your testifying how to get that down to a Mickey Mouse or Mark understandable
I think
statement?
he did.
Who did?
That was the movie.
Michael Lewis,
Michael Lewis.
Moneyball.
Yeah,
Moneyball,
Yeah,
that's right.
Oh,
Yeah.
can you take a stab at it, or you
No,
prefer not to?
no.
Oh, really? You hate that much?
No. I mean, I think it's again, it's looking at something and not looking at it critically. And
So that's the failure.
and it's an example of the underlying assets. I mean, you were making loans to people that
Shouldn't have
somebody
been.
should have known that were not, were never going to be.
But by clumping them together, the notion was reducing the risk.
Yeah, but it's
Should somebody have known?
when the music stops. That's when you find out.
Yeah, so that's the notion of you tie more rocks together, it'll just sink faster.
Yeah.
Should somebody have known that?
Yeah, there's problems on the capital side for banks. There was, I think, over reliance or infatuation with internal modeling that, didn't turn out. I can't tell you how many times I heard that, people saying that there'll never be a national decline in home prices. There were a lot of assumptions that proved wrong and bit people back hard.
Should that, without getting into the politics of it, is that something I won't say your office, but some office in the federal government should have picked up on, or are there just so many issues you can't really point to the regulators?
No, it's a lot of people bear responsibility, including the regulators. When I became Comptroller of the Currency, I invited a group of foreign regulators from Australia, Singapore, Canada, country, the IMF as well. Countries that had survived the crisis relatively unscathed. Look at our large bank examination program and tell us, where the weaknesses are, and a lot of the issues really resulted to being too close to the banks, being myopic, not looking at, if you look at one bank and you don't examine what their peers are doing and take a horizontal view, you can miss a lot.
Go ahead.
I was just curious about the FDIC. You said you served on the board. There was no conflict involved there? I
went
guess
from one
not,
to
or
the
else you
other.
wouldn't.
Yeah, I was appointed by President Bush to serve as a member of the board, and as comptroller, I was an ex officio member, so I served for 13 years from January 2004 to May of 2017.
Was that so you'd know what's going on over there, or they'd know what's going on with you, or how?
Yeah,
both?
I mean, the idea was to have the chartering entities of banks to be on the FDIC board, which was both the federal bank regulator and the receiver for failed banks.
How did you work with the Federal Reserve? What was your relationship?
Closely, yeah. I mean,
So
especially after
Janet would
crisis.
ask you, should we raise the rates this month? And you'd-
No, on the regulation side,
Oh, all right.
yeah. So, I mentioned earlier to Mark and to Dave, who was on the Financial Stability
Where was
Oversight
Mick?
Council.
Oh, he was out.
Mick was
Yeah.
falling on a rug.
Yeah.
Yeah.
Again, there was after the crisis, Dodd-Frank, I think, was an attempt to, what went wrong, how do we fix each thing? And it was very complex.
Is Dodd-Frank going to go away, or is it going to be revised dramatically, or what's going to
I
happen?
think Dodd-Frank is here to stay. There was a legislative tweak to it this past summer.
Yes.
That'll probably be as far as the legislature goes, but there's a lot of discretion in the regulatory agencies on the rulemaking, particularly in the capital area, that there can be refinement of both regulatory requirements and how you apply them.
Interesting. So the failure here was the failure of us to dive into this earlier on.
Well, look,
It's really
I think our other
interesting.
failure was he's clearly one of our best
Yeah.
guests ever.
Certainly today.
Well, definitely today. Probably even this week.
You're our best guest this week.
Thank you.
It's a low bar.
So from all right, I'll do an interview question, and you can get mad at me.
That's all right. I'm finding music to bring
Okay,
us out.
from a prescriptive standpoint, how can people prevent failure in sort of the new fintech things that you're seeing or hearing about?
Well, I think, do you want to prevent failure? I think you want to have, encourage experimentation, but make sure that you've addressed the downsides.
So, yeah,
especially if it's a consumer-facing issue, or
That's
it may
great.
affect financial stability.
I think you want to kind of parry back. I think you want to protect innovation, but and I understand failure. And again, this whole podcast is, as I said, it's about resilience. Essentially, it's learning
Failing
from-
to get here on time was one of the
failure to
big
get here
part
in
of the
time
deal.
or whatever. But it's
Failure to
about
pay attention.
companies that fail. But the real failure is when they don't learn from their errors or their mistakes. So from a prescriptive standpoint, given you've got a fair amount of regulatory baggage, if you will. I mean, experience.
Gray hair.
Yeah, look, that's shared in this room.
Well, those of us
that still have hair.
it. Yes.
But if you were advising a group of young MBA students, what would you tell them in terms of don't do that? And Dave's going to play music.
No, not
there's-
yet, not yet. Keep going.
I think I try to not start with don't.
Okay.
Yeah, I
Oh, this
think
is great. Yeah, keep going. Not
the
the music, the answer.
No, that's really the responsible innovation project that I initiated at the OCC was all about being more open to different ways of doing things, having an open portal to non-banks
Right.
to learn from whatever.
So try anything.
Yeah, and one of the things when we developed the concept of the Special Purpose National Charter for FinTechs was also to make sure that we had the ability to be the receiver for the bank, because the FDIC would not be involved. And that was an explicit acknowledgement that, we weren't looking to avoid failure as long as it was a good faith experiment, sound business plan. We were willing to take the
if
risk.
stuff went sideways,
Yeah,
in other words.
but to
as a result of
recognize,
that.
I think, when you're in a regulatory environment, you don't want to eliminate failure. You have to make sure that you have the ability to wind it down and do it softly.
Wait a minute.
Yeah.
Can we go back to that? You said
Yeah.
it a few times. You don't want to eliminate failure.
Yeah.
That's an interesting take on it. So you don't want to eliminate failure, you want to eliminate the downside risk of
That's
failure.
Banks fail, and if you didn't want banks to fail, you wouldn't have any risk in the system.
And what would that mean?
Well, it'd be less lending, less economic growth.
A lot of U.S. savings bonds.
Yeah.
Oh, so maybe you can address the bigger issue that has concerned us for now 29 episodes, which is failure natural? Is it a necessary evil? And is it even evil?
No, I don't think it's evil. I think it's a part of the
Oh, I feel
the
so
cycle.
much better now. Oh,
But failure can have bad
It's a circle of life.
impacts.
yeah, no, that's what
We
we
wouldn't we wouldn't have invented too big to fail if
Yeah.
we thought failure was good. And
Yeah.
the FDIC is there for failure. That's a backup.
Yeah, it's a backup.
Yeah.
Yeah.
It's a plan B.
So they're trying to say, well, you didn't really fail.
No, you did fail, and we're going to now have to.
But all your depositors are not going to lose all their money.
Right, so you're saying, this goes back to the skiing analogy, you're saying that if banks aren't taking risks with, for example, new high-tech companies or new mortgage securitization vehicles, then we may not advance and we'll be stuck in the 1860s or whenever.
I mean, a bank of today is radically different than a bank of 1933.
And that's because of the risks they took.
Or a bank in 1970.
Yeah, and I think my view and that of the OCC is that banks should be dynamic and that they should evolve with changes in the financial industry, and that's what fintech is about, and that's why the OCC looked at it from a regulatory standpoint, and to the extent you can do it in a prudent fashion, embrace it. Try to make sure that your core interests are addressed, but then allow for healthy experimentation.
And do you, as a practical matter, see? Well, I guess we saw experimentation in those securitized mortgages. That could have come out well, but turns out it didn't.
Yeah, we had a lot of debate. I mean, the white paper that I put out in early 2016 was responsible innovation, and what we wanted to underscore is there's a difference between an innovation and a fad, and try to describe in broad terms what that meant.
So you would say then that failure is sort of the flip side of the coin of experimentation.
Yes, things are going to succeed and some aren't.
It's interesting to me, and growing up in the banking industry for many years, because I was a depositor and a customer and a borrower, lending today is so much different than it was in 1970,
How so?
1971. You used to go to the bank and the guy'd look at you and say, yeah, you got a job and I'm going to loan you some money.
You had not tripped on the rug before doing that.
No,
Okay.
and my glasses weren't broken even.
Yeah, keep going.
And he'd give me a check for
That's
a big
true.
number, and he'd
That's true.
actually give me the check, and he'd say, by the way, go do the paperwork, next week.
Ah.
It was very, very interesting, and he knew who I was, and he knew that I was going to probably not leave town, and that was banking. And I'd go buy a building, I'd say, I want to borrow 110% of the cost of the building, and he'd say, okay, what are you going to do with the 10%? I said, well, I'm not going to take it and put it in my pocket, I'm going to put it in the building, and that and some additional money. And he'd say, okay, I'll loan you 110% of the value. Very different world.
No, but but going back to this point, which is important, that's a case of almost anti-experimentation, which is that's putting the brakes on the system. And Tom's suggesting that there have been innovations in banking that that freed things up and
I
brought
don't
us to
think
places.
that's true, but maybe you're right.
No, but I'm wondering. But that sounds like to me.
There's been good and bad.
Have there been
Yeah.
Can you name, for example, an innovation that's come in since 1860 in banking, or 1960, either way,
yeah.
in banking that we wouldn't have guessed about, that one might have been nervous about, but it came in place and it turned out to be great. Cryptocurrency could someday be that, but we don't know.
I can. ATM.
Yeah,
Oh, there we go.
I'll even go
ATMs.
back even farther. I mean, we were talking initially about how the OCC was created. Prior to the OCC, you had state banks chartered by state governments that issued their own currency or banknotes. One of the purposes of the National Bank Act, besides financing the Civil War, was to put the state system out of business. It didn't go away. It didn't go away because they invented the check. So, I mean, there is a history of innovation, whether it's radical or pervasive, you can argue about, but.
So somebody invented this check, so to speak. Oh.
Yeah, and, I think,
Wasn't Mark.
A recent change, I've analogized today to, the introduction of internet banking.
Right.
And when, I was in the regulatory community at the time, everybody's running around saying we need to have a whole new structure of law and regulation. And my view was, no, we don't. The laws should be, or the framework should be, is flexible enough to deal with it. And, this is probably an overstatement, but the only thing you really needed for internet banking was digital signature authorization.
Yeah. Interesting.
So today, with fintech firms, and again, primarily in the payments and in the marketplace lending area, the framework is there. It's fairly flexible enough that it should be able to adapt to the technological innovation.
So Nick
It's
brought
like, can you guys quit fighting over these questions?
No, because I forget.
For some reason, they're interested in this.
Can I help by saying I've got a more important question?
There we go. Yeah,
That's
dive in.
better.
No, the banks, the regulators today on the banks are
It's a trick of
so,
Nick's.
they really can't tie the hands of the people.
Yeah.
To their business, I think they should be lenders. They should lend, and if you don't need the money, they'll lend you money today. If you don't need it and you got security, you got $500,000 in the bank, they'll loan you $400,000 because you got $500,000 in the bank.
True.
And I think it's a shame.
Yeah, my view is, there's really a tension between how you approach regulation. Do you do it prescriptively with statutes and rules, or you do it through principle-based or prudential
It
supervision?
used to be called banking. They called it banking because you'd
No.
say, hey, I think you're
But
going to pay me back.
going to it from a history standpoint, what you've seen a series of major bank failures. There's a congressional reaction which really tightens the screws on the regulators and the bank's flexibility. You have the S&L crisis.
The liberalization of the bankruptcy laws, and now it's okay to go bankrupt. In fact, it's good business to go bankrupt. It's a strategy to go bankrupt. And that's a tragedy. 'Cause
Is it?
The
Wait
other
a minute,
bankers,
but Tom's not saying that.
well, I mean, I can't give Tom's opinion. All I can say is that
Well, that's
is well,
true.
I can
You
actually. I can't
yeah,
give Tom's
never
opinion.
stopped me.
Sorry, yeah. No, I think the idea is that the reasons that the banks would loan you money is the fear of bankruptcy. You were feared you'd never show your face in the street again.
I
You'd be
know, but
locked
I-
out of any additional credit, too.
Right.
But Tom,
but
as
now
I
you
understand-
can get 7 years and you get it all back and you can just as good as new.
But as I understand what Tom's saying, the banks are willing to take risks on loans, and that can advance society. They took a risk on, I'll make it up, Facebook. They took a risk on.
Those weren't banks. Those were
No, they're not. No,
venture
no.
capitalists.
They are. But my point is that some they are venture
The
capitalists.
banks are
but at
not
some
making
level,
unsecured
banks are-
loans. They're not making unsecured loans today that I've ever heard of. Is that true, Tom, pretty much?
Unless you're talking about small denomination loans, yeah.
So,
And the idea.
But what's happened is that, again, you had the S&L crisis, the FDIC insurance fund was depleted, the savings bank fund had to be merged, there was over billions of dollars of support provided to the banking industry, Congress turned the screws on the requirements. They demanded much tighter rules on lending.
So is that good, Mick,
and
from your
investments.
perspective, or not?
No.
I can't say if it's good or bad. I'm saying here's what it is. There is no banking anymore in a pure sense, the way I think of banking. Banking is secured lending now. And the requirements for security of the lending, how much security you need, whatever those regulations are turned back and forth. But the idea is, that the regulators, and I went through this as a developer of real estate, where they called all my loans. I'd never missed a payment. And, well, wait a second, what happened? Well, the regulators changed the reserve requirement, not the reserve requirements, but the requirements of appraisal value and whatever. And
Your
it was-
prior point, Mick, was that because where in the old days there was enough fear of taint by going bankrupt, nobody would
Certainly
go.
one of the powerful things was you didn't,
It's
you were
reputational.
stigmatized for life. if
So
you
that the
went
bankers
bankrupt.
weren't so worried. They could lend you
Right.
money because they knew nobody would go bankrupt.
Well,
Or
they-
purposely.
No, but
Yeah.
they knew him. They knew Mick. Mick would walk in.
They should have known
It was
better.
relationship banking,
Yeah.
essentially.
It's exactly right.
Yeah.
And so the point
That
I was-
doesn't exist anymore.
That's right, because
And I think that's bad.
So
I think we need to invent a new bank
So what
that's
do you
really
think?
a
So,
bank.
But let,
Yeah,
let me
well,
make my
Mark,
point.
yeah.
So
You have one?
This I do actually. This is sort of an arc from trust-based relationship
Raiders
banking
of the Lost Ark.
to trustless, which is the blockchain, fintech stuff. And the point I wanted to take us to is we're now going away from even people having transactions, but things having transactions, which is I'm not going to go too far with this.
No, and don't tell us you were on the MIT Enterprise
I'm still
Forum
on the
board.
Enterprise board.
Oh, you're holding
The
the
board of
board.
directors,
Oh
that
my
is.
God, here
And
we
I
go
also chair
again.
the
Oh
Connected
my
Links group.
God.
But I have a great amount of
MIT,
interest.
where are they getting the $1 billion to build this new artificial intelligence
It's in
thing?
an envelope in the someone's desk, I think.
It's
But so the point I want to make is, so we've gone from
Satoshi Nakamoto.
trust and relationships to trustless with blockchain, Bitcoin, all that stuff, to transactions not even between humans, but between. I'm not even talking about
You
machine
clearly have
trading.
not been drinking enough today.
No, I was up very early for a workout too. Oh
my
but,
God.
But so I'm just
guy's on a
I'm just
roll.
wondering,
Proud of
is
you, Mark,
that
for-
thank you?
proud of you
Is
for
that a
that.
Yeah,
fair
good for
sort
you.
of progression? Am I is this a
It's a leap
my-
of everything, Mark.
Yeah, no,
Faith and
because
everything
this
else.
is what I'm hearing.
I've got a
seeing
kind of
this-
a more narrow.
He's got a more
historical
intelligent way to
approach.
look at this.
So you think I'm hallucinating?
You are.
Banking was
I've been buying drugs on
banking.
Bitcoin.
Yeah, banking was a personal, one-on-one,
Back in the day.
character-based lending when everybody was local. With securitization, you need standardization. If don't meet the standard, then you're not getting.
And the
what you
standard
want.
was that you be a member of the local community and known by the bank.
Well, I'm talking more about, with mortgage lending, I mean,
Yeah.
yes, with the GSEs, of standardization, so you could securitize it. If you're outside that parameter, you're outside of it. That triggered things like the Community Reinvestment Act to, be more flexible with, low to moderate income people in terms of lending. But, you're going back to the example, the S&L crisis, people started throwing the keys in. So,
right.
we can't have that, so you got to tighten everything up.
MAGA, make banking great again.
The
Magaba.
Well,
Mugabe.
it's I think it's had the opposite effect in many respects.
Oh.
I try to get a loan on a house, all right?
Yeah.
They say, where's your W-2? Well, I haven't had a W-2 for 30 years.
Right.
And they say, well, but,
Yeah, we have a
where's your-
checkoff box for the
I
W-2
said, well,
here, and you don't have one.
income from real estate and from
Yeah.
investments and from things that I do that is outside the W-2 realm. And they say,
drug
well,
money does
that
not
money
count.
can go away. That
Yeah.
we
Yes,
can't
that's
apply
true.
that
True.
to your loan.
Yeah.
So we're going to turn you down. Well, okay.
But couldn't you secure it with something, they wouldn't
No,
allow
I
you?
mean, I said, look, I got stocks well in excess of the loan I'm making.
Right.
And they
That
say, well,
wasn't
you can
enough.
margin those, which you can do.
Yeah.
But anyway, it's very, very mystical. Because the lenders, the lending officers, I went to 3 different ones, they all said, oh, this is not a problem. and it was a problem.
Yeah. So there's it's been a trend toward increased standardization, and if you're
Yeah,
not in
this is,
the
we're gonna
box, you're out
securitize
of it.
this. This is gonna go into a pool. Unless it fits in this box, we can't loan you the money.
So where Mark
Because they
was
can't sell
going,
it, which is how the
Right.
whole
And
crisis
the
happened.
regulators want you to be liquid, or have
Right.
the ability to sell off, and having a mortgage-backed security is something that. you
so
can
where
sell.
Mark was going with his little diatribe was the point, your point
More of an
was,
observation.
your observation was that we've gone from trusting Mick to trustless to.
Why am I, I'm really not the guy to pick on here.
Okay, we're not.
Tom
being
is the guy to pick on.
No, he's
You're
I
an
used to
example.
be the
You're an
guy that you
example.
could pick on, not
all right.
anymore.
So your
So,
point was we're
but-
going for a trustless. Oh, that
Well,
we need
so
more
I-
regulation.
I would,
though.
no, so I was
more
going from
regulation.
I was going from person to person,
yeah.
trust-based, banking to trustless using the current fintech stuff.
Right, to-
the machines are now arbitraging
Yeah.
excess energy between
Well-
each other and
Well,
collecting
you're
microtransactions
taking this in a
using
direction. Okay,
Bitcoin.
okay, that's possible. But if you don't even have to go as far as IoT. By the way, you on the board of MIT Enterprise Forum?
I remain a proud member of the board.
Oh,
of
that's
directors.
amazing. I forgot about that. So in any event, but your point is this is going to now folks who
That's
could
the
be.
board of directors.
You're talking about
Important
folks
people.
who are
do you spell
overseas. We
board?
can't. We can't.
When I talk, it's spelled the way you're
We
applying.
can't see them, and so the point here is that we need more regulation.
Speaking as a director,
But don't we need more regulation? Don't we actually need more regulation as there is less trust?
I
Isn't
think
this
you
good?
need a framework that works, and then you need some flexibility, and I think that's through prudential application of prudential principles.
I think the answer to Mick is welcome to the Matrix. In the Matrix, there is no trust. You're just another bit.
Well, you have to learn to work around it.
Well, so we don't have any great music. For some reason, the Mikado is not readily available.
Yeah, 'cause
on
nobody
Tidal.
listens to it.
Jay-Z's,
Disappointed.
what is it? Jay-Z's Prize Mikado. Jay-Z's Prize title does not have the Mikado. No surprise. But any final words on failure in banking or success in banking, or maybe on Mick's fault?
No pearls of wisdom.
Well, there we go. Well, thank you.
Yeah,
great
thanks.
podcast.
Great.
Yeah.
Thanks, Tom.
No.